What's going on, guys? Welcome back to the channel. We have an incredibly important video to get into today. So we're going to be talking about two things: this Robinhood and Citadel lawsuit that was dismissed. And when you guys see these headlines, you are going to think this is done forever, but that is simply not the case. This is likely to get reintroduced into a different courtroom, or possibly the same courtroom, in the next couple of days. So watch for those headlines. We're going to break down exactly what was said and how I know this by personal experience. Not myself personally, no criminal cases, but I've been through the courtroom, and some of you guys might know this story, but we're gonna kind of go over that a little bit for you guys, how I know and have a background in this kind of thing, as well as that, even more important than this whole lawsuit situation, I want to go over the over leveraging that Citadel is currently doing, as well as compare them to Archegos and how Citadel could possibly go bankrupt if a couple key things happen in the overall markets. So let's get into this video. I am very excited to bring you guys this information. It took quite a while to do the digging on all of this, so hit that like button for me, consider subscribing to the channel, consider sharing this video with somebody else that has the wrong impression on one part of this lawsuit situation, but also wants to learn how Citadel could theoretically go bankrupt, and probably will happen in due time. I'm not saying it's going to happen tomorrow, but there is definitely some red flags here that should be acknowledged. So let's get into this video. Hit that like button, all that good stuff. Like I already said, check out the link in the description for Moomoo to get 5 free stocks when you open a brokerage account and fund that account. More details on that with that link in the description. So let's first talk about Robinhood and Citadel win dismissal of meme stock lawsuit. So like I said in the intro, guys, when you see these headlines, it looks pretty bad. Like this is all doom and gloom. Nothing will ever come about with this. But let's break down exactly what was said, and then we'll get into this other situation because it's pretty straightforward to the point. So Citadel Securities and Robinhood Markets Inc. won dismissal of a proposed class action lawsuit brought by retail investors who had accused the firms of colluding during January's meme stock frenzy. U.S. District Judge Cecilia and I can't say that, in Miami said the plaintiff failed to show that there was any agreement between Citadel Securities and Robinhood to act in cohort. In a Wednesday ruling, they dismissed the case without prejudice, giving the investor group until December 20th to possibly file an amendment complaint. And that's really what I want to talk about. Dismissed without prejudice. And this essentially means it may be a little different between criminal cases, which I'm going to tell you guys about right now, and more financial cases. I imagine it goes along the same line. So my brother, I shouldn't say an accident or anything, he was killed basically, and I don't want to get demonetized, so I can't say all the details of this, but we went through court proceeding after proceeding for a little over 3 years. By the time it came down to right before trial, not during trial, but right before, during the pre-trials, they dismissed the case without prejudice. And we all thought at first that, so we're not going to go about this? All the evidence is here, right? We thought that was going to be the case, but the lawyers had to tell us that no, it's essentially just means it's dismissed in this courtroom. We go down and refile literally the second after. So he never got out of jail. And that's kind of the same situation with this prejudice situation between Citadel, Robinhood, and retail investors. This is likely just to be reinitiated again in the next couple of days, because they do go on to say during this, which is not as important, that the emails between Citadel and Robinhood's top executives does show some form of collusion, but not enough to directly say that they did actually collude together to do this one thing, and that would be to essentially get out of their short positions, or at least hampen the burden of those extreme short positions that were going against them. So we'll just have to wait and see these kind of things. Like I said, with the situation with my brother, it took about 3 years, over 3 years from the start to the finish, about 3.5 years. So this is not going to be something that is done in the near term future. That's what you guys need to know. And I don't think it really matters if we're talking about even Citadel going bankrupt, like we're going to talk about in just one second, or if we are talking about the MOAS in general. general. Stay tuned for this video over the weekend. We're going to be going over the Santa Claus rally, how this could play into seeing a big rally in AMC stock here throughout the rest of the month in November and in December. There's a lot of things that people just need to know, and I'm incredibly bullish about AMC. You couldn't convince me to sell my shares at the current moment. But let's move on from this. That's basically the grand scope of things I wanted to get across to you guys, is that this is likely just to be reinitiated in the next couple of days, if not the next day, right? It could be initiated again here today on Friday. So that's what you guys need to know from that. Let's talk about this whole Citadel bankruptcy situation, and we're going to do this by comparing Archegos, because Archegos did have their big falling out back in March of 2021, so just in this past year, and banks lost a fortune. Banks lost about $10 billion, and what is essentially happening here is that the hedge fund over leveraging is insane, and this mixed with Citadel being a part of all of these allegations, this has Balsany bans hiring from Citadel unit. This came out today, and this is a very rare thing. When you are reading these articles, that's something that will stick out to you over and over again, that this kind of action typically doesn't happen because hedge funds can compete with each other and they try to hire the best employees. But this firm is coming out with $160 billion of assets under management saying, hey, we don't want anybody from Citadel, and this firm is about 3 times smaller than Citadel as far as assets under management. So this does send a big red flag that something else may be going on under the surface that we are not fully aware about yet, but it just does make a lot of sense in general that firms don't want to be associated with Citadel because they don't want to feel the full wrath of the retail investor or be looked at by the SEC or any other regulatory agency. Now, back to the situation with Citadel potentially being so over leveraged they could go bankrupt, and this is something that is real, guys. So Citadel's hedge fund regulatory leverage was at 8.1% or 8.1 times in 2020, in 2021, currently at 7.4 times over leverage. So what that basically means, if you had $100 million of assets under management, it's pretty straightforward. You'd be able to control $740 million worth of assets under management. That is pretty straightforward. We know about this. Citadel is much more over leveraged than the other 3 firms that are on this chart. So they are one of the more highly over leveraged funds on paper. And this is all fine and dandy, but when it comes to compounding your gains and compounding your losses, that's where this leverage situation takes a turn for the worse. And that's where we're going to start talking about Archegos and what happened with them, because this is, like I said, happened in March. So this is relatively new as far as, financial markets and what happened with them. And we can learn a lot and try to put the pieces together on how over leveraged they were and what could happen with Citadel. So this says, on March 26, 2021, Archegos defaulted on margin calls from several global investment banks, including Credit Suisse and Nomura Holdings, as well as Goldman Sachs and Morgan Stanley. The firm had, this is the most important part, the firm had large concentrated positions in Viacom CBS, Baidu, VipShop, Fartech, and other companies. And the firm's use of total return swaps had helped to hide its high exposure from lending banks. Its derivative contracts exposed the firm to severe losses when the trades went bad. The Wall Street Journal reported that Wang lost $8 billion in 10 days, while Bloomberg News reported that Wang lost $20 billion in 2 days. So that is the most important part. The firm had large concentrated positions, and that is what Citadel does not have as far as we do know. Their largest position is Facebook, and that is a little bit over 1% in total, with a lot of that exposure being with call contracts, and that's also where it gets a little bit tricky as well. So if we take a look at Citadel's latest 13F filings, how much they have on assets under management, they have $481,209,729,000 of assets under management. This is much larger than what Archegos was, but you guys can see the massive rally that they have had. So they are very comfortable with using this extreme leverage, and that is all fine. But when it comes to these stocks going down, and they have 13 13,667 positions. So once these stocks start to take a turn to the downside, you're going to see these losses be compounded. And with the concentrated positions and not being so concentrated, there is a give and take with that as well. When you are concentrated in positions like Archegos was, if you just turn a blind eye like Archegos did to these losing positions and you're not able to get out at the right time, you can have disastrous losses. But it goes the same way with Citadel having over 13,000 positions. It's going to be very hard to manage all of these losing positions, and they are going to compound a lot faster, even if you recognize the markets are taking a major downtrend and you are starting to lose your ass. It's going to be hard to manage 13,000 positions. And this is really speculation in terms of I don't know when it's going to happen, but we know eventually the markets will take a turn to the downside. Maybe it's because inflation goes crazy. Maybe it's because of something else, but eventually this will happen. And the point is, Citadel is very used to being highly over leveraged. And that's something else that I want to talk about is the leverage ratio. So Credit Suisse gave Archegos big leverage for collateral. Bank offered leverage of 10 times, asked 10% collateral. Swiss Bank now cutting back prime brokerage business. And that's very important, 10 times leverage. And Citadel, as we do know from this, in 2021, they're at 7.4 times leverage. Now, if they are also using option strategies to basically hide how over leveraged they are, that's a very bad situation for them. But I don't necessarily think that's the case because they've seen what happened to Archegos. And still, 7.4 times leverage is a very large amount. You and me, retail investors, we can never get our hands on that kind of leverage. And that's probably a good thing in general, but I don't think anybody should be able to have this kind of leverage. And like I said, once the market does come down, that is the main key catalyst. When the market comes down, they're going to have a massive debt burden. All of this, leverage ratio, 7.4 times, very, very high number. They're going to have to try to figure out what to do with 13,000 positions, and that is going to be their downfall, as well as redemptions. Around the last 45 days of the year is when you tend to see redemption. So even tying into this theory that I said I was going to make a video over the weekend, which we will dive more into this, when you're talking about November 15th being that 45-day mark until the end of the year, we are now at November 19th, and this could be the time period where you start to see some of those redemptions, and that could ultimately put pressure on this leverage ratio of 7.4 times leverage. Now, like I said, I'll say this again, this is not to say this is going to happen. Citadel is going to go bankrupt by the end of this year or next year or even the year after that. That's not to say I'm not going to put a timeline on this. Who knows if they will ever go bankrupt. I'm saying that this is a big problem, something to watch out for, and it would not surprise me at the current moment to see this happening. They're going to see a lot of redemptions. They're going to see their assets under management shrink, and I'm sure they don't want to look bad in the financial markets. You're already getting firms that don't want to work with them. If you're seeing a lot of redemptions, they might just hide the amount of redemptions that they are seeing by using options. And I'm not accusing them of doing this. Obviously, I have no proof of doing this, but it only makes sense when you're such a big firm, you're a huge market maker, and you want to keep your credibility by showing investors are not pulling all of their money out. So hopefully this all makes some sense to you guys. I hope you guys can resonate with what I'm trying to say here. If I'm not doing a great job, let me know in the comment section of this video. I will make a total video about this and break this down the most precise way possible, because I think everybody should understand everything that was said in this video, not just one point or the other. So hit that like button for me, consider subscribing to the channel, and as always, check out the links in the description if you want to support the channel as well as get all the free stock your heart desires, with the link for Moomoo, the link for Weeble, and the link for Public. You guys cannot go wrong by doing that. I am a part of all of those brokerages, and I personally love all of them. So that is going to be all for this video. You guys enjoy the rest of your day, and I will see you in the next one.